Good morning, friends. Welcome to marathon for today. We are in retail marathon. Yeah. So everyone join fast. Hi, hi, hi. Everyone, hi. Yeah. It's just now started. Saraswati. Yeah, it started. Everyone join fast. Hi, hi, hi. Yeah, join fast, everyone. Hi, hi, hi. Yeah. Good morning, everyone. Morning. Everyone, morning. Just join fast. Hi. Hmm. So we are in we'll be doing retail case studies. What all case studies are there today? See here. Firstly, we'll be dealing with credit card. Then we'll be dealing with this reverse mortgage case study. Important ones. Then we'll be dealing with income tax. And then we have one more that is for this capital gains. Okay. So very important case studies lined up. Even there are one or two or more for sinking fund. Yeah, sinking fund and depreciation. That is also lined up over here. So everyone pay attention and be there. Yeah, morning everyone. Morning everyone. Here I'll just repeat it again. What all we will be dealing in. Firstly, we'll be dealing in credit cards. Secondly, we'll be dealing with reverse mortgage. Then sinking fund. Then depreciation. Then income tax. And then capital gains. And then we'll stop. Okay. On everyone. Okay. Because these are the important 5 case studies, 5 to 6, which will come to you in exam. All these are important. Remember, not only case studies, this will come as one-liners also many a times. Okay. So I would suggest first everyone, those who are new, kindly download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study material, current affairs, job alerts, daily quizzes, subject-wise quizzes, and live video lectures. Plus, you will be getting the notes, question banks, tests, everything required for CAIIB. Here, May 23 batch has also started. Okay. So, highlight, I'll show you that also. May 23 because the portion has changed, isn't it? Okay. Subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting all the free YT series. Here, whatever you get free, you must first subscribe to that, isn't it? Click on the bell icon. Also, all the updates for CAIIB, JAIIB, and various other banking exams, you will be getting it over here, isn't it? So, why do we go here and there, isn't it? We must immediately subscribe to such things. Yeah, this is the new batches which I was talking of. See this target batches. May, June 23. December 9th it is starting, and this is also starting on December 9th. Okay. So the timings are given more on this later. Okay. Everyone kindly like, share and subscribe. Comment to this. Morning everyone. Morning. Hi, morning. Yeah. Good, yeah, good. Everyone has joined. Good morning, everyone. Okay. Let me start. Firstly, I'll start with the case study for credit cards. Okay. Yeah. So let's start with one by one. See here, again I'll tell you what are the important case studies. Firstly, I'll tell you first is credit card. Then we'll be doing the reverse mortgage. Then we'll be doing sinking fund, depreciation, then income tax, and last one is this capital gains tax. So 5 case studies we have lined up, and if time permits, then we'll have some theory, but depending on the time permits. Okay. So let's start with the credit card case study. This is the first credit card case study. Everyone, shall we start? Okay. Type yes if you are okay with this. Type yes if you are okay. We should start now. Okay. Everyone is on now or still asleep? Okay. Still in the sleeps? No. Start na? Okay. Yeah. Because your exam is just tomorrow. So there is no sleep for 1 or 2 days, isn't it? Okay, let's start this. Mr. X has a credit card of ABC Bank and credit limit of 5 lakhs. Billing date is 5th of every month. Maximum interest free period is 20 days. Rate of interest is 3% per month. Okay. So this is the basic given. Now firstly understand everyone. How many of you have credit cards, deal in credit cards? How many of you? Because what happens, we bankers sell credit card to everyone, but we ourselves don't have credit cards, isn't it? Many a times I've seen this. We sell credit card, but we don't have credit card for ourselves. Or even if we have, we don't use it. There is somewhere lying in the cupboard, somewhere packed, okay? So how many of you deal with credit cards on a daily basis? Anything purchasing should be done with credit cards. How many of us deal with it? Yeah, type yes if you are in that. Yeah. If you deal with the credit cards, not only having it, but also deal with it. How many of you do it? Yes? Okay. Yes. Yeah. Everyone is coming yes now. Okay. Chalo. So what is the, if you know it here, things become very easy then. Firstly, what is this? Credit card limit is given as 5 lakhs. Okay. This credit card limit means what? This limit is given by that company. That this much I can use. Remember, there are two limits in credit card. One is cash limit and second is credit limit. Okay. Cash limit means what? I can withdraw cash from ATM in case of emergency. But remember everyone, do not withdraw cash from credit card if you are not in emergency. For any purposes, normal purposes, do not withdraw cash. Okay. So credit card limit given is 5 lakhs. Billing date is 5th of every month. Every month. Now what do you mean by this billing date? This is called as the billing cycle actually. See here, it's like this. We hear generally that the customer gets 55 days of credit, right? 50 days of credit, all these things we hear. But that is not true for everything, for all the purchases. See here, it's true when, suppose if I'll tell you one simple logic over here. If the billing date is 5th of every month, 5th, okay? This is 5th, okay? If my billing date is 5th, means what? I get 20 days after that to repay my card, okay? Now I'll tell you one simple example over here. If this is 5th of, let's say, what is this given over here? May, some month is given. Yeah, 5th May, okay? Let's say, if this is, let's say, 5th May and my bill has been generated now, okay? 5th May bill has been generated. So next bill will be generated when? If 5th May is my first bill generated, next bill will be generated when? Everyone? It will be generated on 5th of June, isn't it? 5th June. Now, if I purchase something, okay, everyone pay attention now. If I purchase something on 6th May over here, 6th May, 6th, okay, 6th May I purchase. So on that, what will happen for this? When will I pay for this 6th May? Okay, I'll pay for the 6th May on, means my billing cycle will be on 5th June, right? So I'll pay for the 6th May, whatever purchase I have done on 5th of June, means this will be the date, and 20 days is the credit free period, means what? I will pay 5 June plus 20 days, okay? So it will be 25th June. So I'll be paying on 25th June. So now calculate the number of days. From 6th May I purchased it, and when am I paying it? 25th June. So how many days are there now? It's approximately 50 days, isn't it? Somewhere here and there. So 6th May to 5th June, roughly 29-30 days, depending on the number of months and number of days in the month, right? So it is this. Then after that 20 days. So now I am getting 25th June. So this is my credit free period. So remember, anything which is purchased on immediately after the billing cycle will get what purchase in 5th May. Yeah. See here, it depends on what is the timing of that billing. Okay. So what if somebody purchases on 5th May then? What is the timing of your billing? Suppose if the timing is in the morning itself, means at night, if it's in the first cycle, then even if you purchase it on 5th May, you'll get the bill on the 5th June only. Once your billing cycle is done, okay, once your billing cycle is done, after that, whatever you purchase, you get it in the next bill. So depending on what time your billing cycle is run by that bank, see here, there are two batches to be run by this bank always, okay. The batches of every bank differ. if it's in the BOD, beginning of the day, so it will be run in the morning itself, 3 a.m., 4 a.m., 12 a.m. means when the BOD batch runs. So anything purchased after that BOD batch will come in the next bill. If it's run in the EOD batch, end of the day batch, then what happens? Whatever you'll purchase on 5th May, and if it is run on the EOD batch, you'll get it immediately on the 5th May. Got it? So it depends on when your batch is run by your bank. So generally it's one and the same, okay? Generally it's run at the BOD only, beginning of the day. So coming back. So now, suppose if I purchase something on the 4th of June, okay? So how many days will I get the free credits here? My billing cycle will be 5th June now. So I'll be getting the free credit for 20 days and 1 day more, 21 days. So see here I was getting for 50 days, here I am getting for 21 days. So I am not getting the free credit for of 50 days for each and every purchase. Immediately after the billing date, if I purchase, then I will be getting the free credit of 50 days, otherwise not. Okay. So now let's look at the problem. Yeah. Mr. X purchase, no, okay, let me go through the main point over here. Billing date is 5th of every month. Maximum interest free credit period is 20 days. Rate of interest is 3% per month. Okay. 3%. So this, look at this, it is 3% per month. Per month. So per year it will be what? 3 into 12, right? So per year how much will the rate of interest be now? If it is per month 3%, then per year it will be what? Everyone? Correct. 36%. 36%. This is called as APR actually. I'll come to this later in this case study itself. Mr. X purchased some product online for 3 lakhs by using credit card on dated 4th May 2019. So he purchased it on 4th May. Okay. After 28 days, he paid the entire outstanding amount with interest. So this guy paid after 28 days. Okay. 4th May. Let me write it over here. He purchased it on 4th May. Okay. Let me remove whatever is not required over here. Okay. Let's remove it. Hold on. Let's remove everything and now we'll write it. See here, 5th is the billing date. Now 5th May, 5 May, I'll write it M only, 5 May, okay. And when did he purchase it? 4th May. 4th May he purchased it. So when is the credit free period of his? Credit free period from 5th May is 25th May. 25 May. So this is my free period. I'll write it free over here. Means if I pay up to this date, okay, I won't get any interest on this. But this guy paid on 28 days after. So 4th May plus 28 days. It comes down to roughly, see here, 1st June. For 1 June. Okay. So this guy, instead of paying on 25th May, he paid on 1st June. Got it? Now, has he done the correct thing? No. He has done the wrong thing. Because he should have paid by maximum 25th of May. Now what happens? So paid the entire amount after 28 days. Okay. How much interest will be charged to Mr. X? Okay. So what is the rate of interest given? 3% per month. So what is the billing date now? Look at this everyone. Billing date is 5th of May. Right? I'll expand this a bit. So this. Okay. Now able to see this? Billing date is 5th of May, right? Then what is the due date now? Due date is here, free period. Due date means free period due date. That is 25th of May. When has this person paid? He has paid on 1st of June. Now he has paid 6 days later. So what is the interest period now? Now look at this. Interest period, many of us will feel that due date is 25th May. So if he has paid on 1st June, so he should be charged for only this period, 25th to 1st of May. Isn't it? Many of us feel that he has got this 20 days, he has got it free. So he should be charged for only the remaining 6-7 days, right? But it's not that. In credit card, always remember, the due date actually starts from the billing date itself. Means these credit card companies, when they bill you on 5th May, they are expecting you to pay on 5th May itself. But due to some heavy amount and many of us don't have the money at that time, they give you the grace period of 25 days, 20 days. But it doesn't mean that grace period should be taken as a right for me. It's not a right. It's a means leverage they have given it to you. Okay. But if you delay that after this, then the credit period is for the entire period from 5th May, from the billing date, entire period. So his rate of interest will start from 5th May now. So that's why the rate of interest period is 28 days, everyone. Okay. Got it? Okay. Now next, what is the per day interest for this person? See, this per day interest is very simple to calculate. See this, what is this per month rate of interest? 3%. Okay. If rate of interest per month is 3%, then per year rate of interest is what? 36%, right? So 36%, I'll calculate it over here. See here, per year it is what? Year equals to 36%. So how many days are there in the year? 365. So per day, it is what? Per day equals to 36% upon 365, right? So equals to 0.36 upon 365, right? Right? So that's it. 0.35 upon 365, whatever figure you will be getting, that is your amount, per day interest. Okay? It is 3 over here, 365. Okay? So whatever you will be getting is the per day interest. See this, per day, remember this. Why per day is important? Because we have to calculate it for 28 days. So now the daily interest becomes what? See here, this is for rupee 1. Per day interest, this is the rate of interest. Okay, this is for rupee 1. But how much have I purchased now? 3 lakhs. So 3 lakhs into this per day interest. So my per day interest becomes 295.89. Okay, my per day interest becomes 295.89 over here. Okay, now if this is per day 295.89, for 28 days it will be what? 28 into 295.89. So it becomes what? 8284.92. Everyone kindly try it yourself. I want the answer from you guys also, because what happens is, it shouldn't happen that only I am doing the calculations. Exam is of yours. Okay, so everyone do the calculations also your side by side. So interest rate is what? 28 into 295.89. Are you getting the same answer? 8284.92. Everyone, are you getting the same answer? 8284.92. Everyone should get the same answer. Okay, plus or minus here and there is okay, means 0.92. somebody might be getting 8285, 8286, something like this. That's okay. Okay, because depending on how many points, after the points how many digits we take, it depends on that. Okay, so got it. So importantly now, yeah, so now got it everyone? Getting this answer? Move on. Okay, next question. Mr. X purchased some product online for 5 lakhs by using credit card dated 12th April 2019. Okay, so dated 12th April. Now he has purchased on 12th April. After 41 days, he paid the entire outstanding amount with interest. How much interest will this person pay now? See here, 12th April is a purchase date. Now what do you do? Everyone, don't look over here. In exam, you won't be getting this. Okay, forget this. You calculate yourself now. Everyone calculate it. 12th May. Let me write it over here. What? No, 12th April. 12th April. Okay. So what is the billing cycle for this? This billing date is 5th of. Everyone, what is the billing date for this 12th April purchase? It is 5th of. Yes, everyone. What is this? It is 5th of May, right? So if 5th of May, then he'll be getting a credit free period for how many days? 20 days. So it is 25th of May, right? He'll be getting it the credit. So up to this time if he pays, he'll be getting free. Okay, no charge. Now on what date has this guy paid? 12th of April he has purchased, and 41 days later. So 41 days means here. Don't look here. I have done this calculation. It doesn't mean you take it directly from here. Go on with 41 days now. 12th April, 22nd April, right? 2nd of May. April is of how many days? 30 days. Okay. So 22nd April, 2nd of May, 12th of May, right? And then 22 May, right? 22 and May and one day more, 23 May. So when is this guy paying? 23rd May. Calculate it this way always in the exam. Okay. Go on rounding. Keep the habit of rounding. Okay, in CAIIB. So 12th April. Again, I'll tell you for those who didn't understand this. Keep it very simple. 12th April. So go on 10 days. 12th April, 22 days. 22 April. Then 2nd of May. Then 12th of May. And then 22nd of May. Now this completes 40 days. But we want 41 days. So it becomes one day more. So 23rd of May. So he is paying within the limit only. 25th May is a free period and he is paying within the limit. So how much interest will this guy pay? 0. Because nothing is there, right? Everyone got this? Move on. Simple one. Okay? Because here you have to understand these concepts over here. Okay? Next one. What is the APR? Annual percentage rate. Now this question comes in exam many a times on APR. Okay? APR means what? They give you APR, only this word. You must understand what you mean by APR. APR is very simple. What is APR? Just multiply 3 by 12 per annum rate of interest. That is APR. So what is this? 36%. Simple. What is effective rate? Now this is something different. This we have already calculated in our ABM also, in our accounts also, JAIIB accounts. Okay. Effective rate of interest. How to calculate that? See, your formula is same as that of that earlier one which we used to do. Do you find any link of this formula? Where did this formula link to? This first part only. This formula linked to 1 plus r raised to n minus 1. Where did this formula link to? It linked to, correct, future value and present value formula. Anyone remembers this future value? It's just the numerator part of that future value formula, isn't it? C into 1 plus r raised to n minus 1 the whole upon r, isn't it? Ordinary annuity. Okay, remember this now? What are the two types of annuities? What are the two types of annuities? Ordinary and second one is everyone. Ordinary and second one is, what are the two types of annuities? Ordinary and second one. ABM gone, everything gone. No, it is due, correct? Ordinary annuity and annuity due. How to calculate it? Due into 1 plus r. See here, retail is also having this formula. Okay, we will be doing sinking fund now. There also you will be getting the same thing. Okay, so 1 plus r raised to n minus 1 into 100. So this is what r is what 3% per month. So this will be 3 now, and n is what? N is 12 months. Why? Because we want the effective rate for 1 year. 1 year is how many months? 12. So 1.03 raised to 12. Okay, minus 1. So it becomes 42.58. You do the calculations, it will be 42.58. Everyone do it? Yeah. Everyone do it? Yeah, 42.58. Correct? Move on. Clear? Simple one. Mr. X purchased some product online for rupees 4,000. This question is very important from the credit card concept. Okay. Mr. X purchased some product online for rupees 4,000 by using credit card dated 4th May 2019. So he purchased on 4th May. What is the minimum payment Mr. X will have to pay on or before the due date to avoid the penalty? Now minimum payment. Now what do you mean by minimum payment? Okay. There are two concepts in credit card always. See here, whenever you also pay the credit card bill, you will be getting these two amounts, right? One is full amount, second is any other amount, right? So what is the minimum amount I can pay for any purchase? Minimum amount is, here there are two categories over here. 5% of that amount, whatever purchase I have made, or rupees 250. Okay, whichever is more. Okay, this is very important. More, not less. Okay, so if I purchase something for 4,000, okay, so 5% of 4,000 comes out to what? 200. So I'll have to pay minimum amount of rupees 200 or rupees 250, whichever is more. So I'll pay rupees 250. Okay. Now, whichever is higher, 5%, yeah, correct. 5% or 250, whichever is higher, correct. Whichever is more. Now give me one logic behind this. Okay, everyone. Now pay attention. We are in CAIIB, we are not in JAIIB. In JAIIB it was okay that okay 5% of amount, whichever is more paid, done. Give me the logic behind why do they give you this minimum payment concept. Logically tell me, if you are having this 4,000 you have purchased, so you should pay 4,000. Simple, isn't it? Why are they giving you this leverage of paying either the minimum amount or full amount? Why are they giving you? What do you think should be the answer? Because we are in CAIIB. CAIIB is based on logic. Okay. So why this? Because the concept is intent. Intent. Here, many a times it happens that your salary gets delayed or something happens. There are some extra expenses which come in. So in that case, what happens when you have this extra expenses? It must show that you have an intent to pay. Even though you don't have money, but you are not a willful defaulter. For to show that, how is it shown? It is shown via making the minimum payment. So if you pay the minimum amount also, in that case, the bank understands that you have the intent to pay. But presently you are not having this money, that's okay. But if you have the intent to pay, bank will say okay, pay minimum amount and next month or whenever you get the amount, you pay the remaining balance. Okay. Now the part over here is very important. Okay, everyone needs to understand this. See this. I'll come to this point only. See here, my billing was 4,000, but I've paid how much? 250. But what about that remaining amount now? What is 4,000 minus 250? Everyone, 4,000 minus 250. Okay, it is what? 3750. 3750, right? This 3750 amount I have not paid, isn't it? Have I paid it? Yeah. Have I paid this to the 3750? So what will this bank do? I have paid 250, so I have shown my intent. But what about this remaining? Will the bank waive off my interest for the remaining part, remaining amount? No. Bank will charge you 3% per month. Per month it will charge you. Okay. So depending on that daily interest. Okay. So they will definitely charge you. So remember this. Even if you pay the minimum amount, you are not escaping from this interest part. Only from what you are escaping is, you are escaping from the willful default category. Your CIBIL score doesn't get hampered if you pay this minimum amount. Okay, that is the basic logic behind this. It shows you the intent. Intent means your inside. What do you feel that it should, I should pay or not pay? Okay, the willful defaulter won't pay anything, isn't it? Got it? Move on. Next one. If the billing amount is rupees 150, what is the minimum payment Mr. X will have to pay on or before the due date? So I have purchased something for 150. Now I have purchased it for 150. Then what does my rule say? My rule says 5% of 150, right? Or rupees 250, whichever is higher. Okay. 5% of 150 or rupees 250, whichever is higher. Okay. So what is 5% of minimum amount? Huh? This is the minimum I am talking of. So 5% of 150 is what? 7.5 rupees, right? What is 5% of 150? Let's calculate it. How many of you can calculate it immediately without calci? Without calci. Are you getting the 7.5 or you are getting the 75 rupees? Yeah? 7.5 or 750, because we bankers are very weak in calculations now, isn't it? So it is 7.5. So what should I pay? 7.5 minimum amount? No. Whenever the purchase is below 250, okay, this minimum amount concept goes out. Okay, you will have to pay either this full amount or 250, or okay. So what should I pay? Full amount or 250? Obviously full amount. Because if I have purchased it for 150, why will I pay 250 now? That is the bank's criteria. I have purchased something for 150 only, so I will pay only entire amount, that is 150. Okay, got it? Entire outstanding amount. Logic, isn't it? If yourself, put yourself in that place. You have purchased something for 150. Okay, and what happens? You have purchased it for 150 and then bank is asking pay minimum amount 250. You will say what is this? Isn't it? Okay. Not required to pay. This is the funniest part, isn't it? Not required to pay. Okay. So that was it about the credit card. Okay. Now we'll move on to the next case study. So before moving, everyone, these are the new batches starting for December, May 2023. Okay, all the 4 new topics here, subjects have changed for May. 4 subjects now compulsory, okay, and 5 specialized topics, okay, and both English and bilingual we are having it, okay. So 4 subjects compulsory and 5 elective subjects, okay. No retail in that. Negative marking is there, okay. So everyone, those who have not been able to clear CAIIB, don't lose heart. See here, it's like this. Exams come and go. Okay, life goes on. Always think that you have got some new thing for studying. If you have not cleared it, nothing happens. Okay. Now let's cover some theory. Okay. Next part is reverse mortgage. But before that, I'll cover some important theory over here. That is Sarsai. These questions also you'll see in the exam. Sarsai. What is Sarsai? See here, I'll just cover the important part, what is required. Not all that Gyan I'll give. Because nobody requires Gyan nowadays, isn't it? Everyone wants what is required fast. Because the period is of shorts. What is this world of? How many of us watch that YouTube shorts fast, isn't it? Instagram reels, right? So we are over there. So central registry, what is Sarsai? Central Registry of Securitization Asset Reconstruction and Security Interest of India. This is a big full form, okay, but you have to remember it. Central Registry for of Securitization Asset Reconstruction and Security Interest of India, Sarsai, okay. Now only important part, I'll read it, whatever is required for you. The object of Sarsai is to maintain and obtain a registration system for purpose of registration of transaction of securitization, asset reconstruction of financial assets, and creation of security interest over a property as contemplated under securitization and reconstruction of financial asset, means SURFACE. Okay. So remember, this Sarsai has come after SURFACE. It's a support to SURFACE. Okay. Whatever we do under SURFACE, whatever we take under security, okay, yeah. No Gyan, only Samadhan. Correct. Good one, yeah. Good one. Rhyming. Okay. Bankers have become poetic also nowadays, isn't it? Means, I think CAIIB teaches everything to the bankers. Poems, then knowledge, everything, isn't it? Okay. So, Sarsai is to maintain, operate, and basically what is this? This is a register. See, what is the name? Central Registry. Registry means what? It's simple register. Okay, kept online nowadays, isn't it? So object of operate registration system for the purpose of registration of transactions of securities, means what? Whatever I do as a mortgage, whatever I give as a mortgage to those guys, I have to input it in the Sarsai, right? So basically it is for surfacing. By law, it is mandatory for the banks to provide the information about the disbursed loan within 30 days of the loan finalization. In case of failure to update the Sarsai database, the bank institutions are penalized monetarily by RBI. So within 30 days you have to put it in the Sarsai system, okay. The Sarsai is set up under section 20 of SURFACE Act. So it is set up under section 20 of SURFACE Act, okay. So whatever rules are applicable to SURFACE, the same are applicable to Sarsai also, okay. Got it? So remember these important days, 30 days of loan, okay. You have to input your whatever you have given under SURFACE, that full transaction under Sarsai within 30 days. So got it? Sarsai charges for home loans are prescribed by Sarsai, and borrowers may pay a fixed fee of rupees 50 for a loan amounting to rupees 5 lakhs. Means up to 5 lakhs the charges are 50 rupees. If the loan amount exceeds 5 lakhs, the borrower must pay fees of rupees 100 towards the original filing or modification as per Sarsai charge. So what have you to remember now? One is 50 rupees up to 5 lakhs. Above 5 lakhs, rupees 100. Okay, these are the two figures you will have to remember. Got it? According to directive issued by the government, all lenders, banks, FIs, remember, now one important point you must always remember. What is that? It is not only for banks. SARFAESI Act is not only for banks. Okay, so SARSA is also not only for banks then. It is banks and FIs, all the institutions. Okay. So banks and FIs, all these things, okay, must register with SARSA all information about the concrete guarantees that have been created. The registration must be completed within 30 days. Okay, done that. So you must input all the concrete guarantees. What do you mean by concrete guarantees word over here? Concrete guarantees means the name of the guarantors also and the security details. That is important. Collateral details. Okay. SARSA is mainly for these collateral details. Okay. Got it? Yeah. Move on. Is a class. Yeah. Till 8. Yeah. Shall we move on now? Done. Now this reverse mortgage case. Okay. Reverse mortgage case. Here the questions which I have kept are general over here. Means everyone pay attention now. Very important case study. You will get some case study of this sort. Okay. Reverse mortgage. Got it? Yeah. So Mr. and Mrs. X are aged 62 and 57 respectively. So the ages of Mr. and Mrs. X are 62 and 57. They don't have any income source. So they reverse mortgage their house to SBH Bank. Value of the property is 80 lakhs. Loan to value ratio is 70%. Rate of interest is 9% per annum. Okay. So this is the basic given for this case. Okay. Now we'll go case by case, point by point. Okay. Age. Is this age okay for reverse mortgage? Okay. If this is okay, then what is the actual age? Okay, give me everyone give me the minimum and maximum age. Minimum age, I'll mark it in two parts. Okay. First applicant and second joint applicant. We'll mark it like this, joint. Okay. Joint means second one. It is here. Don't consider husband to be the first applicant only. It can be wife also first applicant, because if her age is bigger, it can happen. Wife's age is bigger also. Okay. So what is the minimum and maximum age? Okay. Maximum. Everyone. Yeah. What is the minimum age for the first applicant? Everyone. What is the minimum age for first applicant? 60. Okay. What is the minimum age for the second applicant, joint one? What is the minimum age for the joint applicant? Minimum age for the joint applicant, everyone. It is correct, 55. Joint applicant, it is 55. Okay. 55. Correct. What is the maximum age for these? No age limit. No limit. Okay. No limit. I'll write it over here. Limit. Okay. Limit. Same over here. Limit. So maximum they can take any age. Okay. What is the basically the logic of reverse mortgage? Reverse mortgage means here reverse mortgage loan is the reverse of your normal mortgage loan. In normal mortgage loan, what do? I mortgage my property to the bank. I take full amount now. Look at this. In normal mortgage, I take full amount of, let's say, 20 lakhs from the bank, and then I pay the EMIs. In reverse mortgage, what happens? The reverse thing happens. I reverse mortgage the property to that bank. Means what? The bank is not taking the possession of that property now. Okay. So even in my normal mortgage, bank doesn't take the possession. So what do? I take a loan of, let's say, 20 lakhs from that, but the bank doesn't give me 20 lakhs full right now. It gives me in installments. Okay, per month, per quarter. There are two options available here also in reverse mortgage. Bank can give me full amount, not full amount, one stroke amount of some part, and then it can give me the remaining amount in installments. Okay. So 50% is the one stroke. I'll come to that. We'll come to this one by one. Okay. Is their age okay? Firstly, yes. Done now. 62 above 60, 57 above 55. Done. Okay. Move on. Where can they use this amount and where they can't? Okay. This. Where they can't. Where can somebody use the reverse mortgage amount? Okay. What is this old person using this amount for? Number one. Everyone write it in the comment section. Where can they use it in the this amount? Everyone. Yes. They'll be using it where? For medical, right? Medical emergencies, medical emergency, right? medical emergencies. Generally medical emergencies only they use it. Or second part, medical emergencies. Second, as pension, daily expenses, right, for pension. Then because if they don't have any other source, how will they live? Okay. Third, any urgent requirement, means son's marriage, daughter's marriage, right, marriage or festivals, any function as such. Okay. So function, marriage, anything happens for that also. Okay. So these are all, what do you mean by all these things? These are your daily requirements. Okay. Now where they can't, suppose if somebody, because here 60 years is not too old now. Okay. Because minimum age is 60, right? So that is not too old. 60 years person can definitely work for more 15 years more, right? So this person, if he uses this reverse mortgage for, number one, he can't use this here. I'll write it now. Can't. Okay. He can't use it for business. Okay. Business. And he can't use it for trading, stock market. Otherwise what will happen? Any person is a 60 years person, he is also clever, isn't it? He'll take this money and invest it in the stock market. So that is not allowed. Okay. So he can't use it for these two purposes, businesses and trading. So you tell me, if say this 60 years person wants to do business, what will he do? Can't he do it? He can do it. But in that case, he should not take reverse mortgage. He should take the normal mortgage, isn't it? Reverse mortgage is for those persons who don't have any income source. If he is doing business, means what? He has an income source, isn't it? Got it? Clear? Okay. Move on. So pension, these things, where he can't, done. See here, these questions will be there in exam. What is the maximum and minimum LTV ratio? So for this loan, what is the minimum loan bank can give and what is the maximum loan bank can give? Minimum, I'll write it first. So minimum is this much and max is this much. Who can give me the figures now? Minimum is what? Minimum LTV ratio. What is it? Minimum is, everyone, it is 60%, correct, 60%, and maximum it is, what is the maximum? Correct. Everyone, yes. Maximum is 90%, correct, right? So minimum is 60%, maximum is 90%, and what has the bank given? Bank has given 70%, so it is within that limit. Okay. So 70% is within that limit, so it's allowed, isn't it? Okay. Now maximum amount bank can give monthly. Now this is an important calculation. Now everyone take calci in your hands. Everyone take calci in your hands. Yeah, how will they return? I'll come to that. How will they return the money? Okay. Everyone take calci in their hands. Start calculating. Means what? What is the amount bank will give monthly? Okay. Use this formula of future value. F equals to what? C into, what is that? Everyone, 1 plus R raised to n minus 1 the whole upon R, right? This formula. So use this formula. But what have we to find out? We have to find out this now. This is the question mark. Okay. F is known. What is F? F is a loan amount. What is the loan amount? What is the value of that property? 80 lakhs is the property and 70% is the LTV ratio, right? So 80 into 70. So what is that? 56 lakhs. 56 lakhs, right? 56 lakhs is my F. So my F becomes 56. Okay. Now see, I have to find out what is my R. R is what? Everyone, what is R given over here? What is R? 9%. Should I divide it something or anything? Okay, let's not calculate it monthly. It's very difficult. I'll calculate it yearly. Okay, yearly. Because monthly it will be huge. Okay. R means what? Divided by 12. So N will be what? Depending on that loan period. Okay. So let's calculate it yearly. I'll tell you one trick for this monthly calculation. Okay. So R is what? Rate of interest is given as 9%. 9%. Okay. So we'll calculate it yearly only. So ROI is 9%. Okay. What is N now? Is the period of loan given over here? Let's see. What is given? Is anything mentioned that the loan period is this much, 10 years, 15 years, 20 years, something mentioned? No. So what is the limit? As per the rules of RBI, the rules are maximum period should be, everyone, maximum period should be maximum, okay, 15 years, okay, 15 years, this should be the maximum period. Max, I'll write it over here, everyone pay attention, okay. Maximum period is 15 years, everyone, okay, got it? 15 years, so I'll take it maximum now, okay, 15 years. Now there are 2-3 questions which may arise from in your mind. Maximum period is 15 years. Now I'll ask you 2-3 questions. This person's age is 62 now, right? And we have given the loan for 15 years. Now how will I get the repayment from there? That I'll tell you right now after this question, okay? So let's calculate the EMI first, which the bank will pay. See this, bank is going to pay this guy yearly, okay? So what is C now? F is what? 56 lakhs. 56 lakhs equals to C into, okay, 1.09 raised to n is what? 15 years minus 1, the whole upon R is what? 0.09, right? If you calculate it monthly, then it will be what? This n will be 15 into 12, 180. On that simple calculation, you have to do it into equal to up to 181. It's a huge task, isn't it? So calculate the C now. What is the C you are getting? Everyone, let me also calculate live over here, okay? Let me calculate live. You guys also calculate. What is the C you are getting now for yearly? Okay, we want yearly now. So the C figure for yearly it is, yeah, let's calculate, okay? 56. Firstly calculate is 1.09 raised to 15. Everyone, 1.09 into equal to do it up to 16. You do it, okay? So up to 16 you do it. What is the answer you are getting? Everyone, 3.64. Everyone is getting this. I'll write this. 56 equals to 56 lakhs. 56 lakhs into, now I'll write it over here. Is everyone getting this answer? 1.09 raised to 15. What are you getting, everyone? Do it yourself. 1.09 raised to 15. What is the answer you are getting? 3.64, correct? 3.64, okay, minus 1, the whole upon R, so R is 0.09, okay. Forget this, we'll just mark C over here, okay. This 56 we'll take it later. So what is the answer now? So it becomes what? 56 lakhs equals to C into, what is the answer now? Direct answer for this, yeah, direct answer for this is 3.64 minus 1. So it becomes 2.64. 2.64 divided by 0.09. 0.09. So what are you getting now? 29.33. Everyone? 29.33. 33. Are you getting this? 29.33. Everyone? C into 29.33. So what is the C amount I am getting now? C amount is, I'll write this now in zeros. 56, 1, 2, 1, 2, 3, right? 56 lakhs upon 29.33. Do it now. So what is the answer you are getting? 56 lakhs upon 29.33. Okay, what is the answer you are getting? 56, 1, 2, 1, 2, 3. It is what? 190,909. So you are getting this as, everyone, let me see how many of you are getting this answer. No, multiply it with lakhs, okay? Dipankar, do it 90 also, multiply it with lakhs, okay? 190,909. So this is yearly figure, year, okay? Per year it is, okay? This much amount the bank will give per year. Okay, now my question is different. My question is, if they ask you monthly, then what? If they ask you monthly, you will be doing all that 180 over here, then R you will be dividing by what? 12, right? So R is what? 9% divided by 12, and then you will be doing this raised to 180. Don't do such big figures, okay? What you do, whenever they ask you monthly, okay, what you do it for yearly first, because that's simple, and then divide by 12. Hardly it will make a difference of 5-10 rupees, okay, and the answers given in the exam may not be that near. 190 means something related divided by 12. If you do, there won't be the difference of 5-10 rupees, okay, there will be huge difference. So you'll get the similar answer over there, okay. Point number 1. Point number 2, okay, what is this amount? Means this bank is giving him 190, let's say for a year. So for per month, what will it be? Monthly, let me calculate it. Monthly it is monthly. I'll divide this by 12 now. So 190,909 divided by 12, right? Upon 12. Roughly he'll do it what? 15,909, right? So monthly it is 15,909, right? This much is the figure. So now the question is different. How? 29.33. See this, 3.64 minus 1 upon 0.09. Okay, got it? Endeavor, correct? Yeah. So 15,909. Now the question of mine is, what is the maximum amount the bank can give as EMI to this person? Means monthly to this person. This is 15,909. Imagine if the loan would have been for, instead of 56 lakhs, this would have been for 5 crores. Okay, if this property would have been huge and the loan would have been 5 crores 60 lakhs, 10 added. Okay, so in that case, what would have been the monthly payment? 15,909 over here. So it would have come to 1,59,090 in that case. But what is the limit? Should it go on? Suppose if let's say the property is, this loan is for 5 crores, I told you. Let's say the loan is for 56 crores. This person is having a huge property. So this amount is 56 crores. So this amount will be again more, 15 lakhs per month. Isn't it? Should the bank give this much? No, there is an upper limit to this. Every month the limit is maximum, okay, max 50,000, 50k. This much is the maximum limit this bank can give this person per month. It can't give beyond that. Okay, got it? Everyone, maximum bank can give is 50k, 50,000. Okay, next one. Maximum amount bank can give in one stroke is, means if the bank wants to give this amount in one stroke, out of this 56 lakhs loan, how much bank can give in one stroke? Yeah, how much can it give? See here, it's like this. If it's one stroke, then there are two rules again. 50% of loan, okay, or 15 lakhs, whichever is less, okay. So 50% of the loan is what? 56 lakhs. So 50% of this loan is what? Everyone, 28 lakhs, okay, or 15 lakhs, whichever is less. So the bank will give this part, 15 lakhs, correct? Got it? Bank will give 15 lakhs to this person as one stroke. Now why is this one stroke amount given? One stroke means out of this 56 lakhs, bank will give him 15 lakhs, okay, and remaining amount, what about the remaining amount then? That will be given in the monthly installments. So again you will have to calculate this. Using this 56 lakhs, you will make this what? 56 minus 15, so 41 you will make it over here. So 41 upon 29.33, this will be the monthly installment which this guy will be getting, okay, yearly installment which this guy will be getting, okay. Yeah, so yeah, where is this formula used? 1 plus n, same we have used it, that only. Okay, PV into LTV ratio, that is the same thing which we have done. PV into LTV ratio, loan to value ratio, okay, that is the for sinking fund generally used, okay, sinking fund. And this also, what is LTV, loan to value ratio? LTV we have already calculated. See this 56 lakhs, from where did this 56 lakhs come? PV into LTV. See this, I'll show you what is PV into LTV. PV into LTV, okay, loan to value ratio. See this is actually what? 80 lakhs into LTV is what? 70%. So that is PV into LTV. So you come out to 56 lakhs. This is how we have got the figure of PV into LTV, okay. Got it, Shiv Kumar? Move on. Chalo. Yeah. So done this. Yeah. What happens if something happens to Mr. X? So now see here. Now the question comes of the repayment. How is this repaid? See here. Reverse mortgage is always is never repaid basically. I'll write it. It never repaid. Never. Now you'll say never repaid means what? See here. There are two options again. You can repay. Can repay means this customer, if he is having that money, he can repay. But even if he doesn't, then also no problem. What happens if something happens to Mr. X? Okay, then his wife is still alive. So what happens? She can stay up to her death, means up to whatever time she wants. Not only death, if she wants to go somewhere else, she can move on. Okay, so she can stay up to the time she wants to live. After she leaves that house, okay, in that case afterwards, what will bank do? Bank will sell that property and get the amount of the loan and pay the remaining amount to the heirs, whoever the heirs are, or if she is alive, they'll pay it to her. Got it? This is how the reverse mortgage is repaid. If I'll again repeat it, okay? Can you provide reverse mortgage formula? There is no formula. Formula is this only for this per month. Okay, this formula. There is no other formula. Okay. So now, again I'll repeat it. How reverse mortgage is repaid? Where if you have to repay the reverse mortgage, first thing what you have to do, either there are two options. You can repay. If you are the old person, you can repay. If you have the money, you'll repay everything. That's okay. But if you can't repay, then what? If something happens to Mr. X and amount is not repaid, then bank doesn't come tomorrow and put a gun on the head of the other person. That okay, now that main person is gone, first holder is gone, now you repay and you be out. See here, up to the death of that second person, the bank can't touch that property. So that property is kept as it is till the person wishes to live, second person. Okay. So what happens after that? Once the person leaves that property or he or she expires afterwards. Okay. So in that case, now the property is in the hands of the bank. Bank will then mortgage that property, get the amount, and then pay the remaining amount to the heirs. Whoever are the heirs. Okay. Yeah. LTV we have already taken in calculation. Okay, 70%. So move on. Done with this, everyone. Yeah. What if I repay? Suppose if I repay, I am the 62-year-old person and I repay it in 10 years. So it's okay. Bank will say okay. Nothing. Now the mortgage is removed. Means the bank's name on the property is removed then, isn't it? What is the EMI paid by Mr. and Mrs. X? Okay, this loan these guys have taken. What is the EMI with which these persons will pay to the bank? Who can give me the answer? EMI. Very simple answer. Yeah. What is the EMI these persons will be paying? These guys will be paying, everyone, means they have to pay the EMIs. How much EMI do these persons pay to the bank? It is, everyone, yes, it is nil, right? Nil. EMIs are not paid by this person to this bank. Okay, he either closes it completely or the bank reverse mortgages sells that property later. Okay, nothing. How will bank recover the fund? Just now I told you, by selling the property after the death of the second person. Okay, or selling. Okay. What if the heirs pay back the loan? Means, see this. Now let's say if something happens to this second person also. Okay, there are two persons. One is of the age of 62 and second is of 57. Now if both of them expire or something happens to them, they leave this property. Then bank can sell that property, that's okay. But if they hire sons, daughters, if they repay the loan, then what? Then bank will say, what is the problem then? Banks are only concerned about the loan part. Okay. Banks are not in the business to acquire the property of the customers. Is this the business of the bank? No. We take this as a collateral. Okay. So what will bank do? If the heirs repay the loan, bank will remove this mortgage name of the bank on the property and move out. Maximum tenure of the loan. Just now I told you 15 years, right? 15 years. Yeah. Now one question which arises in the mind over here is 15 years. Suppose let's say I'll give you one case over here. This person's age is 62. Okay. The loan is for 15 years max. Now if he lives after 15 years, means this person lives for, let's say 62 plus 15 is what? 67. Okay. Now if this person lives for 67 and 68 years, okay, he is still alive. What will the bank do? Loan is gone, 15 years over. What will the bank do then? Okay, what will bank do in that case? Yeah, see this, there is one possibility available over in reverse mortgage also. After all, what is here? Bank is here to recover the funds. If some customer says I'll repay that loan in EMIs, okay, that's called as reverse mortgage equal this what installments. Okay, reverse mortgage loan enabled annuity. That's what is the meaning of this. If I am, let's say, the 62-year-old person and I say that okay, I'm going to repay it in monthly installment, bank will say okay, happy, isn't it? After all, bank is there for this funding only, getting back the funds only, isn't it? So I'll be more than happy in this case. So how will I give him the EMIs? Same formula of that EMI formula. In that case, the EMI formula will be, see this. Now if I have to repay it to the bank, then the EMI formula is that of that. See this, I'll give you this EMI formula in that case. EMI equals to, okay, this loan amount, okay, into R into 1 plus R raised to N, the whole upon 1 plus R raised to N minus 1. So this is my EMI formula if I have to repay. Remember, if I have to repay this loan in equated monthly installments, okay. So this is this meaning of reverse mortgage, reverse mortgage loan enabled annuity, okay. In this case, if I have to repay the loan, then I have to use this formula, okay. If the bank is giving me the EMIs, means per month if they are paying, then the earlier formula which I gave you, okay. Now come to the main question over here. After, if I stay for 68 years, then what will the bank do with this because loan is over. So the question over here is, bank will stop giving me the installments. See, our bank was giving me 50,000 maximum, so it will stop giving me the installments, but it can't tell me that move out of the house or repay my loan back. No, bank can't tell me that. The loan will stay as it is till my expiry and the expiry of the second person. It will stay as it is, but the funding will be stopped by the bank. So that is the basic rule. Got it, everyone? Clear? Everyone clear with this concept? Because this is very important for you guys, okay? Reverse mortgage. Okay? Shall I move on now to the next case study? Okay? Type yes if you have understood this. Only this much is enough, okay? Nothing more, nothing less is required. Move on. Yeah. Chalo. Next one. See here, again look at these batches, okay? For May 23. First I would suggest clear it in this exam only. You have cleared ABM, BFM. Now only what retail is remaining. Why do you go for the new things? But if you go, then we are there to support you, okay? Next we'll go for sinking fund. Okay? Sinking fund. Okay. What is sinking fund actually? This you have studied it in JAIIB also, isn't it? JAIIB and CAIIB also, ABM, some part you have studied it, isn't it? Okay, what is sinking fund basically? The fund which we create for what do we create sinking fund? Suppose, let's say, I'll give you a simple example. If I have to purchase some car after, let's say, 3 years, and I don't want to take it on loan, I want to take it on cash. So what will I do? So in that case, sinking fund will be created by me. Per month, I'll consider that, okay, 8 lakhs, 10 lakhs is the price of that car. So I'll divide this 10 lakhs into per month and also use that rate of interest concept, time value of money. And then I'll start doing an SIP or RD for that amount, isn't it? So that is basically sinking fund. So at the end of the life of a structure, when it ceases to yield desired income, the property has to be replaced, okay? Has to be replaced so that the income may continue for the further period, okay? The fund set aside for the purpose of recovering the original capital is called a sinking fund. So if I want to get a new car after 10 years, 3 years, 4 years, whatever that period is, okay, whatever amount I collect is the sinking fund. Now this is for the car. I have given you an example. Imagine I am having a new car right now, okay, and then what will I imagine? I'll say that after 5 years this car will give me servicing problems. So what will I do? I'll have to replace this car. So in that case, what should I do? So now the concept comes over here. See this. The fund set aside for the purpose of recovering the original capital. So if this car is for 10 lakhs, I must get again 10 lakhs in for buying that new car. So that is known as sinking fund. The amount to be regularly set aside out of annual income to create sinking fund depends on the compound interest it is supposed to earn over the life of that structure. Okay. So what is the compound interest you will be earning? So now what is the rule for this sinking fund? Remember, all this said and done, all the full gyan of this sinking fund, I'll give you a simple rule. What is sinking fund? Sinking fund is nothing but a future value formula. What is the future value formula, everyone? A future value formula for that annuity, right? Ordinary annuity and annuity due, both. Okay. So what is that future value formula? C into 1 plus R raised to n minus 1 the whole upon R. Okay, because if I go on with the theory of sinking fund, it will go on and on and on for 2 years, 2 months, okay, 2 hours, okay. So sinking fund is huge theory. Only what you have to remember what I have told you. So F and C. So what is sinking fund? This is sinking fund. This part is known as sinking fund. Means this C which I have to find out is the EMI which I have to pay per month. So that is the basic problem of sinking fund. Okay. F is what? The target amount. This car is for 10 lakhs. So F becomes 10 lakhs. R is what? The rate of interest which is going on. So generally it's inflation. Okay. Inflation is R. And what is the period? N. Got it? Clear? Simple. Move on. Yeah. Clear? The sinking fund factor is the amount that accumulates for rupee 1 if invested at a specified rate of interest for certain number of years. Now this sinking fund factor, I'll tell you one important part. This sinking fund factor comes in exam many a times. They ask you a sinking fund factor. What is this sinking fund factor? Blah blah blah. All this is, I'll tell you, nothing but very simple concepts. Okay, but what happens in books, we read so much and we get confused. Okay, let's come back to the formula now. What was that formula? F equals to, what is this? C into what? 1 plus R raised to n minus 1 the whole upon R, right? So this full part over here, okay, 1 plus R raised to n minus 1. Let me calculate this as capital X. Okay. So what is my sinking fund factor now? Now sinking fund factor becomes 1 upon X. Because I have to multiply this to my loan amount. So it becomes 1 upon X. Okay. So remember this. Sinking fund factor is 1 upon this. Whatever factor I am getting, that is to be divided by 1. So then I will be getting the sinking fund factor. Okay. Let's calculate it over in this case also. If tomorrow, let's say, this problem comes to you in exam. Same problem comes to you in exam. Okay, rupee 1 accumulates at rupee 1 blah blah blah. So the factor for redemption of rupee 1 at the end of 25 years at 5% compound interest is 0.021. Now you have to get this answer 0.021. How will I get this amount? 0.021. What is this 0.021? This is the sinking fund factor for rupee 1. So how will you get this? Let's calculate it. Okay, let me do it one by one over here. So 1 plus R raised to n. What is R over here? We are calculating it annually. So annually means we will keep R as it is. So it is 1. I'll directly do it. 1.05, right? Raised to how many years? 25, right? 25, right? Minus 1 the whole upon R. So 0.05. Okay. So what are you getting this? Everyone try this now. So 1.05 raised to 25 is what? Everyone. 1.05 raised to 25, 1.05 into, now go on doing it, into equal to up to the time you get it 26, right? So 1.25 raised to 25, 1.05 raised to 25 is, everyone type fast in the comment section, What is the answer? Yes, I'll have some water till now. Yeah. Type fast. Okay, yeah. What is the answer you are getting, you guys? Everyone? Are you getting this? 3.38 I am getting. 1.05 raised to 25. 3.38 I am getting it. 3.38. Okay. 3.38. Okay. Minus 1. The whole upon 0.05. 05. So what is the answer now? 2.38 upon 0.05. So upon 0.05. 47.72. Are you getting this answer? 47.72. See this. This you will be getting at 2.38, right? Upon 0.05. So you're getting it as 47.72 something, isn't it? Are you getting this 47.72? 47.72. But that, what is this? This is x. This x which I have written. Okay. 47.72. This is this x. But what is my sinking fund factor? Sinking fund factor is 1 upon x. So it is 1 upon 47.72. So you get it as, if you do it 1 upon this, you will be getting as 0.0209, right? So it is roughly 0.021. 0.021. So this is my sinking fund factor. Okay? Yeah. This is my sinking fund factor. Everyone, it is always the reverse of this 47.72, whatever I get it over here, right? So it is the sinking fund factor is always the reverse. So this is my sinking fund factor. So what do I do now? This sinking fund factor, I'll multiply it with whatever that amount is given. Suppose if this 15 lakhs, the original amount for that capital is 15 lakhs, I'll just multiply it with 15 lakhs. Okay. So this much is the amount I must keep out per annum. Okay. Per annum, so that I get this 15 lakhs at the end of this period, 25 years. Okay. Suppose if you are asked this monthly, then this becomes difficult. You will have to divide this 5% by 12, multiply this n by 12, 25 into 12. But remember, in CAIIB, they won't ask you such stupid, I will call the questions, because what is this? Are you checking this n? N means 25 into 12. Are you checking the calculation skills of the student or the knowledge skills, right? So they don't ask you such 25 into 12 and all these things. Okay. So keep it simple. Okay. Got it, everyone? Move on. Got this concept of sinking fund, everyone? Sinking fund factor is important. Sinking fund you already know. Sinking fund factor was important over here. Okay. Got it, everyone? Move on. Clear? Now depreciation. Depreciation, again you will get it in exam. Depreciation you will be getting in only two methods are there for depreciation for CAIIB. In JAIIB you had all those four methods, right? What were the four methods? That straight line, WDV, then double declining, and last one was what? Sum of years, isn't it? Remember this? Or JAIIB gone, everything gone, isn't it? That is also the concept. JAIIB gone, everything gone. Same thing will happen after retail also. CAIIB clear, CAIIB gone, everything gone, isn't it? No, it should not happen like this. Apply this knowledge in your banks, okay? Chalo, move on. Depreciation means here, depreciation is again sinking fund only. Depreciation means loss in value. A building loses value due to deterioration in physical condition as a result of usage, wear and tear. Effect of climatic conditions. Poor structural design or workmanship. So because of all these things, depreciation happens. You all know these things. Wear and tear. Then life goes life is unusable, it becomes, okay. An estimate of useful life of the building is made, after which it will be unserviceable and depreciation is charged accordingly, so that the accumulated depreciation becomes equal to the original investment at the end of the life. Oh, so same thing we are doing it in sinking fund also, isn't it? What are we doing in sinking fund? Same thing. So that I recover the original amount which I have paid for. So that is the same thing I am doing in depreciation. So in depreciation there are basically two methods. Okay, I'll come to those methods one by one. Before that, I'll show you this important slide over here. Okay, for sinking fund numericals or time value also. Depends on this. Everywhere it's used the same thing nowadays. Okay, this was there in ABM also. Suppose if you get any problem on lump sum payment, then you have to use this formula: A equals to P into 1 plus R raised to N for lump sum one stroke payment like this FD. Okay, if you get some problem on RD, loans, annuity, okay, then you have to use these two formulae, which is this due and ordinary, right? What is due? Due means beginning. Everyone got this? ABM, we have done it. Okay. Ordinary means at the end, right? So you'll be using this sinking fund formula, this future value formula. If you are getting the problem for ordinary annuity, okay, means at the end I have to collect something at the end of that month, year, whatever it is, then you will be using this formula, future value formula. Okay. If you are getting it at the beginning of the month, if the problem is given that what is it I must collect as for this sinking fund at the beginning of the month, then I'll be using this due formula. But in both the formulae, what I have you to find out is this part P. Okay, this P. Okay, and this FV will be given to you in both the cases. Either let it be in the beginning or let it be in the end. This FV will be given to you. P you will have to find out. R and N will be given to you. Okay. So just remember these two formula. Present value formula is not used over here. Mainly it's not used in sinking fund. Okay. So only future value will be of use to you. Okay. Then I'll give you this EMI formula also now. Somebody was asking me this. Yeah. See this. This same formula of EMI I have given it right now also for that reverse mortgage enabled annuity. Right. The EMI which this customer will be paying to the bank if he wants. In reverse mortgage we don't pay the EMIs, but if the customer wants, then he'll be using this formula. Okay. If the bank is paying the installments to this person, then bank will be using this formula, P into, and just they'll find out P over there. Okay. So now, got this everyone? Simple one. Now important part is, if the compounding is done in any case on quarterly basis, then divide R by 4 and multiply N by 4. If the compounding is done on the half yearly basis, then divide R by 2 and N by multiply N by 2. Okay, clear? Simple one. Move on. This you have already studied now, so we shouldn't waste more time on this, isn't it? Sinking fund numerical. Mr. X requires rupees 5 lakhs for purchase of a car after 4 years. Rate of interest is 10%. How much should he invest at the end of every quarter? See this end, it is given end. End means which annuity? Type it in the comment section. Which is this annuity? At the end of every quarter. So what is this annuity now? End means, correct, ordinary annuity. Okay. So every quarter I want it. Quarter means what? Divide this year by 4, right? Because one quarter 3 months. So divide this year by 4. Okay. So now let's get the future value formula. What is F? F equals to P into, say this. Everyone, yeah, ordinary, correct? What is the future value formula? F equals to, I'll just bring this cursor over here so that you can see it. Yeah. F equals to P into 1 plus R raised to N minus 1 upon R. So what is R now? I want it for quarter. Rate of interest is 10%. This is per annum. Now I want it for per quarter. So it will be 10 divided by 4, so 2.5%. Okay, so percentage is 2.5. Percent means what? Cent, per cent. So divided by 100, right? So 2.5 upon 100, so it becomes 0.025. So my R becomes 0.025. What is my N now? N is 4 years, but the number which I divide, by which I divide this R, same number I will be multiplying it to N. So N becomes what? 16 now, isn't it? N equals to 4 into 4, 16. So now calculate this. So 5 lakhs equals to P into 1 plus R raised to N minus 1 the whole upon R, right? Future value, right? But I have to find this P. So do all the calculations over here. Everyone do it now. 5 lakhs equals to, get the answer for this. What is the answer you are getting? 5 lakhs into this 0.025, I will take it on this side and bring the remaining part on this below over here. So what is the answer you guys are getting over here? Everyone, yeah. One second. It is coming behind my head. One sec. Let me remove it. Let me check. Okay. Yeah. Yeah. Now okay. This. Yeah. Hold on. Yeah. Now it's okay. Okay. Now you're able to see it, right? Okay. So now getting this. What is the amount you guys are getting? 25,800 roughly. So 26,041, 25,800 nearby 26,000. It's okay. Everyone getting the answer is okay. Okay. So roughly we'll take it 26,000. Okay. So this is the amount I must collect every quarter. So at rate of interest of 10% per annum, I'll get 5 lakhs after 4 years. Okay. So this is basically the sinking fund. Got it? Yeah. Move on. Simple one. Simple problem. Next. Sinking fund numerical. What is this? Same one. 26,041. Same thing. Depreciation. Cost of the house is 10 lakhs. Rate of depreciation is 10% per annum. Salvage value is 2 lakhs. House is to be depreciated in 5 years. Find the depreciation amount by, see here, I have taken two problems over here. Okay. Find the depreciation amount by straight line and second by depreciation for first 3 years using WDV. So two methods are there for you in CAIIB and both methods I have taken it over here. Okay. So cost of the house is 10 lakhs. Okay. So 10 lakhs is my cost. Rate of depreciation is what? 10%. Salvage value. What is this salvage value? What do you mean by this salvage value, everyone? Salvage value means whatever remains at the end. I'll call this simple raw language. It is scrap value. Scrap means at what rate I can sell. Suppose if you're having a bike, okay, that bike is there, you buy that bike and after 5 years you go for selling. What amount do you get? You get it as a salvage value or we call it scrap value. Okay. Lowest value you will be getting it, isn't it? So important parts now I'll tell you about this depreciation over here. Okay. Straight line depreciation. Let's focus one by one. Straight line depreciation, it is what? Straight line equals to very simple formula. Cost minus salvage value upon life. This is my straight line amount. Okay. What is my cost? 10 lakhs. What is my salvage value? 2 lakhs. So 10 minus 2 upon 5. So it is 1.6 lakhs. So my annual depreciation over here will be 1.6 lakhs. Okay. Annual depreciation is 1.6 lakhs. Got it, everyone? By using straight lines here. Now I'll tell you a few points about the straight line and WDV. See this, I'll write it over here, isn't it? Straight line. And second is WDV, right? Straight line and WDV. Always remember, in straight line, okay, amount is constant. Amount same, I'll write it, okay? Amount is same. And in WDV, percentage is same. Keep it very simple, okay? In straight line, amount of depreciation is same, and in WDV, percentage of depreciation is same. Okay. Number 2, salvage value has importance. Salvage value has very important is important over here. Okay, in straight line. Here, salvage value no meaning. Salvage zero value, zero importance. It is not important in this WDV. Okay, got it? So remember these two basic rules about straight line and WDV. Okay, for the first year, again I'm giving you something important. For the first year, straight line and WDV will always be same. For the first year, straight line and WDV will always be same. Okay. It is same as that of simple interest and compound interest. For the first year, simple and compound is always same. Same thing is over here. What is WDV? WDV is the same formula of compound interest only. Okay. Okay. Got this straight line 1.6. See, this first question is done. Depreciation amount by straight line. Okay. WDV after, what is this? Depreciation for first 3 years by WDV. So you have to calculate depreciation for first 3 years using WDV method. Okay. So first 3 years using WDV, first 3 combined. Huh? So use the same formula of compound interest. What is that? C into 1 plus R. Instead of plus, use this minus. C into 1 minus R raised to N. What is R? 10%. What is N? 3 years. Isn't it? We want 3 years. Okay. So raised to 3. Remember, not 5 over here. House is to be depreciated in 5 years. But the question over here is depreciation for first 3 years only. I wanted 3 years. This is the question. So whatever is asked over here, use that amount only. Okay. So 10 into original amount, 10 into 1 minus R raised to N. Okay. Why years, 5 years, it has 3 years also. No. There are 2 separate questions. Who's this? Suvarshala Reddy. Okay. Yeah, in straight line. Sure. They could have given 3 years also in straight line. Not an issue. They can give you anything, isn't it? 3 years also they could have given, but it's given that the house is to be depreciated in 5 years. Okay. So that's why you have to take this 5 years. And what is this 3 years concept? You have to find the depreciation amount using WDV in 3 years. These two concepts are separate. 5 years is the life of that house and 3 years is the depreciation amount which I have to find out in this question itself. Okay. So that's why this 3 years. Actual life is 5 years only. Okay. So WDV after 3 years is what? C into 1 minus R raised to N. Right. So C is what? Full first amount, that installment 10 lakhs. Okay. Into 1 minus R. R is what? This R is 10%. Right. So 10%, 0.1, 1 minus 0.1 raised to 3. So multiply this and get the value. It is 0.729. Is everyone getting this? You try it yourself also. Okay. So 10 into 0.729. Getting this? 7.29 lakhs. This is in lakhs, right? I'll write it lakhs over here. So 7.29 lakhs I am getting it over here. So 7.29 lakhs means, what is the depreciation amount then? This is what? This is known as the salvage value after 3 years. Salvage after 3 years, huh? See this, after 3 years. Final salvage value is given as 2 lakhs after 5 years. But here I am getting it after 3 years. Got it? After 3 years. So what is my depreciation then? Depreciation is 10 minus 7.29, 2.71 lakhs. Okay, this is a depreciation for 3 years. 3 only. If they want it for 5, then do this raised to 5. Okay, and then find the value. Okay. But I'll tell you again, this figure if you do it for 5 years also, it won't match with 2 lakhs. Okay. Because I've given it over here. Salvage value is 0 importance in WDV. Straight line it's of importance. Got it everyone? Clear concept? Concept should be very clear in CAIIB. You might have experienced this by now in ABM BFM. If your concept is gone, you are gone. You can't remember everything in CAIIB. Isn't it? Okay with this now? Shall I move on? Okay. Now we'll come to the last part of today. That is income tax slabs and capital gains. This I'll directly show you from the websites of income tax department. Okay. Directly over there. I've brought those sites over there. Okay. So I'll directly show you from those sites only. Isn't it okay? Okay with this? Because what happens? If you get it directly from website of that income tax, then it becomes easy for you, isn't it? Otherwise what happens? It becomes too difficult for you. Means what am I telling you? Suppose whether it's true or not, these things will always be in minds of yours. So let's get it directly from income tax website. Say this. Everyone pay attention now. Very important concept. This is directly from income tax website. Okay. Now, you come to something very difficult. I would say cobweb. Cobweb means what? Do you understand what is cobweb? Cobweb means that spider which he goes on doing all that web, right? And these cobwebs, it's very difficult concept over here. Income tax. Everyone needs to pay attention over here now. Okay, everyone. Don't even look here and there for next 15-20 minutes. Everyone, don't look here and there. Look at whatever I am telling you. Okay. See here. Income tax department or government of India has changed the slabs under for this year 22-23. Okay. Now what is the problem is we are having two slabs now. Everyone pay attention. We are having two slabs. One is the existing regime which they had brought it earlier, which was there. Then they have brought it this 115 BSc. This is a new regime which they have brought in. Okay. See this. Looking at this existing and new, two things you are seeing. Okay. But remember, I'll make it simple, a bit simple. Okay. Let's focus on existing regime, means the earlier one. In that case, what used to happen? Income tax slabs for here, there are three age groups made by these guys. Okay. One is below 60, second is 60 to 80. Here I'll show you 60 to 60 plus, and this is 80 plus. Okay. So below 60, 60 to 80 and 80 plus. Okay. These are the slabs which these guys have made it. Okay. So it might be going below behind my head. Okay. Because I am coming it over here, isn't it? Okay. But do adjust it, because what happens, I can't change the site over here. Yeah. So let's move on. Yeah. So if you look at the existing slab, it is like this. Now look at the figures which I am telling you. Up to 2.5 lakhs income, it is nil. For earlier one, here I am only talking of earlier now. Up to 2.5 lakhs income tax is nil. 2.5 to 5 lakhs income tax is 5% above 2.5 lakhs. 5% above 2.5 lakhs means what? If my income is, let's say, 4 lakhs, okay, and I am below 60, if my income is 4 lakhs, then my income tax will be taxed on not on that earlier 2.5. My income tax will be taxed on the 1.5 lakhs only. 4 minus 2.5. Okay, 5% above whatever it is. Okay. If my income is 5 lakhs to 10 lakhs, means if my income is 7 lakhs, let's say. So in that case, what will be my income tax? My income tax is first 5 lakhs. It is as per the slab. So what is the slab? See here. If let's imagine my income is 7 lakhs now. 7 lakhs. Okay. How will the income tax department divide this using earlier regime? What will they do? They'll do it first 2.5 lakhs, they'll remove it. No tax. Okay. So from 2.5 to 5, they'll make it 5%. Okay. So 5% on 2.5 lakhs, it comes to what? 25 5s. What is the answer? 1250. See this 1250 figure. You don't have to remember this. Okay. You don't remember all these. You'll go mad on remembering all these things. Okay. 5% of 250 you'll make it. Then 7 lakhs is my income. So 5 lakhs is gone over here. So 2 lakhs remain. So 20% on remaining 2 lakhs. Okay. So that will be my total income tax under the earlier regime. Similarly for about 10 lakhs. So about 10 lakhs will be before 10 lakhs, whatever this income is, it comes to 112,500. How did this figure 112,500 come? Okay. This figure came using these slabs. Suppose let's say my income is 11 lakhs over here. 11 lakhs. Okay. How will I calculate? First 2.5 lakhs nil. 2.5 to this, it is 12,500. Okay. Then above 5 lakhs to this, whatever that remaining 20% of 5 lakhs. Okay. So this total figure 20% of 5 lakhs is what? 1 lakh. Right. So 1 lakh over here plus 12,500. So it comes to 1 lakh 12,500. So my income is 11 lakhs. So 1 lakh, remaining 1 lakh, this was up to 10 lakhs. So remaining 1 lakh will be what? 30% of 1 lakh. So 30,000. So 30,000 plus 112. So it will be what? Total 142. Right? Everyone clear this concept? Earlier regime. Okay. Same thing is there for this second also. Less than 60, then above 60. Only the slight changes. Here up to 2.5 it was nil. So above 60 it is up to 3 lakhs it is nil. See this, up to 3 lakhs nil. But remaining things same. 3 lakh to 5 lakh, 5 lakh to 10 lakh, 10 lakh and above. Same logic, no changes. Okay. Earlier regime. Then above 80 it is up to 5 lakhs it is nil. After that same thing again. 5 lakhs to 10 lakhs 20%. About 10 lakhs 31%. These percentages they have not changed. Okay. So only they have given a leeway up to 5 lakhs only. Okay. Now you will tell me everything said and done. I have given you this example also. Okay. Firstly, have you got this concept clear? Okay. Now I'll ask you one question. let me get the answer from you. Okay. Okay. Let's imagine my age is 72 years. Okay. Below 80, above 60. 72 years. And my income is, let's say, 14 lakhs. 14 lakhs. 1 4. 1 4. Okay. 14 lakhs. Now give me the income tax for me. My income is 14 lakhs. Okay. Give me the income tax for me. Everyone. My age group is 72 years. Give me the income tax. 72. Okay. Income is 14 lakhs. Give me the income. Everyone. Everyone. Yes. 14 lakhs. Income tax is, yeah, 4 lakhs above. So 4 lakhs into 30%, right? So 4 lakhs into 30%, it is what? 4 lakhs is my additional income, about 10 lakhs into 30%, right? So it is 120, right? So what is my earlier income before 10 lakhs? It is 1 lakh 10,000. After that 120, so it is 230. This is my income tax, right? 230 lakhs. Okay. Got this concept clear? Now imagine my age is 85 years. 85, okay? And my income is, let's say, 6 lakhs. 85 years, my income is 6 lakhs. Okay? 6 lakhs. What will be my income tax? Earlier category, huh? 85 years, income is 6 lakhs. What will be my income tax? So 20% on above 5 lakhs. So 6 lakhs means what? 20% on that 1 lakh, right? So it is 20,000. 20,000, right? My income tax will be, everyone. Everyone, it will be 20,000, right? So income tax is 20,000 for 80 plus in that case. Got it? Everyone clear? Okay. Now I'll come to the new regime. New regime. Very important concept of new regime. This new regime is called as 115 BSc. If the question comes to you under 115 BSc, follow this new regime. If it is not under 115 BSc, ordinary scheme, it is this earlier one. Okay. Now what is the difference between these two? Main difference. Simple difference. There is a simple difference. What is the simple difference? Can anyone give me? What is the simple difference between these two? Who can give me? Main difference. Okay. What is the main difference? Let me see. How many of you have gone through this? The main difference is correct. The main difference is the main difference is correct. You can't save income tax in the new regime. Under old regime, what was this? I used to do, no, I'll tell you about the saving. In under old regime, I used to invest that 1.5 lakhs gap was there, isn't it? That 1.5 lakhs I'll ATC, isn't it? I'll invest it in this ELSS, I'll invest it in what that insurance, everything was there, right? Under new regime, there is no income tax saving. No income tax saving. You have to pay it whatever comes as the income tax to you. Okay. Main difference is this. Other things are okay. Slabs, 4 slabs, 5 slabs, all these things are okay. Okay. But important part is you can't save income tax in the new regime. You have to pay the income tax. Okay. It's like the US concept. In US, it's the same concept. There is no tax saving in US. Okay. Same thing we are coming up to. So now look at the new regime. Similar ones are there. See this. Up to 2.5 lakhs, nil. 2.5 to 5 lakhs, 5%. Same thing kept. See this. 5 lakhs to 7.5 lakhs, 10%. Then about 10 lakhs, now they have made certain changes over here. About 10 lakhs, it is 15%. 7.5 to 10, it is 15%. About 10 lakhs, 20%. 12.5 to 15, it is 25%. And above that, it is one more slab is there. Yeah, above 15 lakhs, it is 30%. So the slabs which they have made are heavy numbers. Okay, but one good thing about this is the percentages are just in multiples of 5. So that's why it becomes easier. Okay, So 2.5 up to 2.5 nil, same thing. Okay, so about 2.5 to 5, 5%, 5, 10, 15, 20, 25 and 30. Simple, isn't it? They have made it very simple. Okay. Yeah, for this year FY 22-23. Okay, it is applicable. See here, it's given over here. Yeah, see this. When is it applicable? Tax slab for assessment year 22-23. So AY 22-23 means FY it becomes 21-22. Always remember AY is 1 year later. Okay, so it is FY 21-22. It is applicable. So March ended 22. This regime is applicable. I can pay the income tax either using earlier slab, earlier system or new system. Okay, got it? Yeah. Move on. Chalo. So got this point now. 5%, 10%, 15%, 20, 25 and 30. Got it? Clear? Okay. Now let me give you the question. If my income under the new regime is, let's say 12 lakhs. Okay. My new income under new regime is 12 lakhs. And now one good point I will tell you about this new regime. Very good point. Let it be any age group. 60, 80, let it be anything. It's one and the same. 60 also same rules, 80 also same rules, 70 also same rules, everyone same rule. Okay. So that is a new regime over here. It's very clear and transparent and very simple. Okay. So now 115 BSc, if my income is, let's say, what did I tell you? Let me take it this new case. It is what? 8 lakhs. Okay. My income is 8 lakhs. So let's say if my income is 8 lakhs, so under the new regime what will it be? Again the same slabs, up to 2.5, 5%, then it becomes 12,500, then it becomes 37,500. So if my income is 8 lakhs, then 37,500 plus 50,000 is my new income above this 8 lakh, above 750. So 15% on 50,000. So 15 5 is 75, 7,500. So 37,500 plus 7,500, right? Then we have to pay tax on interest from, what is this? PPF. Yeah, everything. See this. If this is a new regime, if here it is what you have adopted for it. Salaried person generally don't face this problem. Okay. This is generally for businessmen. Salaried persons have form 16, right? You pay it and it's over. Okay. This is all for the new guys, for the businessmen. Okay. So 37,500 plus 7,500, it comes to what? 45,000. Correct. 45k. Dheeraj, correct. Dheeraj. Okay. Now suppose if my age is, let's say, 80 years. Okay. And I am in the new slab. Okay. New whatever this scheme. And my income is, let's say, what? 6 lakhs. Okay. So what will be my income tax now? 80 years, 6 lakh. You see all these ages are kept, these categories are kept same. 60, 80, anything. Okay. My income is 6 lakhs. So what will be my income tax now? 12,500 for the earlier one plus 1 lakh. So 10% on 1 lakh is 10,000. Right. So 12,500 plus 10,000. So it will be, everyone, is everyone getting this answer? Clear? Correct. 22,500. Okay. Now concept is clear. See this. New category or new slab. It is mainly you will be getting the question on new slab only. This earlier slab, I don't think so you will be getting the questions now, because government is focusing on this new concept. Okay. So 115 BSc. Got this point, everyone? Shall I move on now? This was the only important part about over here. Okay. Shall I move on now? Okay. So let's move on, because you also guys have to go to this what banks. Okay. Today there's working, no? Isn't it? Yeah, it's working. We are in Friday. I thought it's Saturday. Okay. We are working today, so you have to go to banks. Okay. Now let me complete the last part over here for today's marathon. It is short-term capital gains and long-term capital gains. Okay. Now there are two parts in this capital gains concept. Okay. This is again from the important sites only. Okay. There are two parts in this capital gains concept. One short-term and second is long-term. Okay. Short-term means what? Again there are two parts in this short-term and long-term. One is capital gains on shares and capital gains on properties, things change. Again I'm telling you, that's why I told you next 15-20 minutes you totally focus on whatever I am telling you. Okay. Yeah, capital gains on equities. Equities means equities and mutual funds. Huh? Equity mutual funds. Okay. So equities and equity mutual funds and capital gains on properties. The rules are different. Years are different. Okay. Let's come to equity shares first. Now equity shares means not only equity shares. It means equity mutual funds also. But it does not include debt mutual funds. It does not include debt mutual funds. Okay. Debt mutual funds are taxed similar to that of the property. Equity mutual, because there's a risk involved in equity, isn't it? So short term capital gains. Okay. I'll just cover the important parts over here. If equity shares listed on the stock exchange are sold within 12 months from the purchase, then the seller may make a short term capital gain and incur short term capital or gain or loss. Okay. It can be either of these things. The seller makes short term capital gains when the shares are sold at a price higher than the purchase price. Okay. Means profit is when you get the higher price, loss is when you get the lower price, isn't it? How the capital gains are calculated? Short term capital gains, sale price minus expense on sale minus purchase price. Okay. Sale price minus expense on sale minus purchase price. Okay. This is how it is calculated. Now short term capital gains tax part. See this. Short term capital gains are taxed at 15% for equity. Okay. Everyone pay attention. Okay. Yeah. Short term capital gains are taxed at 15%. What if your tax slab is 10, 15 or 20 or 30%? See this. Everyone pay attention over here. If you are dealing in shares and you get this short term capital gains, okay, let it be any slab of yours, 10%, 20%, 30%, whichever bracket you might be. Short term capital gains are paid at 15% only for shares and equity mutual funds. Okay. Clear concept? Very clear. Morning Akash. Very clear this concept. If you are dealing in shares, okay, your short term capital gains, shares means equity also. Huh? When I say shares, it means equity mutual funds also. When you are dealing in shares, short term capital gains are at 15%. Let it be anything your slab be. Okay. Clear? Move on. Now LTCG, long term capital gains. Long term capital gains means if the equity shares are listed on the stock exchange and are sold after 12 months. If they are sold after 12 months, then it is LTCG. Okay. So what is this LTCG here? LTCG means what? Gain. Gain means what? If I sell it at a higher price, then it's gain. If I sell it at a lower price, then it's loss. Isn't it? Okay. Let's move on. There is something I'll tell you about this important part here. Grandfathering effect. Is there anything given over here? I'll tell you one about, grandfathering rule. See this. Grandfathering rule. This rule comes to you in exam. What is this grandfathering rule? Grandfathering rule means this might come to you in exam. Huh? Grandfathering rule means if I am having some equity shares which are purchased before 2018. Means 1st February 2018, before that, okay. Then if I have to calculate the capital gains, long term capital gains, in that case what I have to do is I have to take the base price of those shares as on 1st February 2018. Means if let's say I have purchased Reliance share in 2015, the price at that time was 800, but now I have to calculate the capital gains for 2022, let's say. Okay, so 15, 22, 7 years. But I don't take 7 years then. I'll take from 2018, 1st February 2018 I'll take it. Okay, that's called as a grandfathering rule. This was something which the government had brought it in this budget, and that has made the life easier for many of those guys. Okay, many of those who are paying long-term capital gains. Okay. So this grandfathering rule might come to you in exam. Okay. Yeah. Now move on. What is this long-term capital gains rate now? See this. Henceforth, if the seller makes a long-term capital gain for more than 1 lakh, understand this, on shares if the value is more than 1 lakh, okay, then the long term capital gains will be charged. Look at this. On equity of shares, equity shares or equity oriented mutual funds, the gain will attract a long term capital gain of 10%. If my long term capital gains are more than 1 lakh, then my capital gains will be 10%, okay. If they are less than 1 lakh, then no tax, no LTCG. No LTCG, I am not talking of short term capital gains, okay. LTCG, long term capital gains, no LTCG for for less than 1 lakh. But what about short term capital gains? Let the short term capital gains be anything. Even if I get 10 rupees as my gains, okay, I will have to pay the short term capital gains at the rate which I told you, 15%, right? Clear? Short term capital gains are there for each and every amount. Long term capital gains above 1 lakh, below 1 lakh, nothing. This is only for shares. Only for shares and equity mutual funds. Okay? Got it? Over. This much is enough for you. Short term, long term for shares. Now property. Okay? This is the last part which I will be doing today, and then we'll stop. Okay? Property. For property the rules are different. For shares it was 1 year. Now property it is, let me expand this. Okay. Where is it? Let me see. It was there. Yeah, see this. If you sell your land, house, property within 36 months of acquiring it, okay, read from this. It's considered as a short-term capital gains. So if it's a property, it's 3 years. Short-term capital gains within 3 years. If you sell it after 36 months, it is called as long-term capital gain. Okay. So this is very important. For shares it is 1 year. So forget the shares now. I'll only talk of property now. Okay. So 36 months, before 36 months if I sell it, short term. After 36 months if I sell it, long term. Okay. So long term capital gains are taxed at 20% plus cess. Okay. So for property it is 20% long term capital gains. Okay. Plus 3% sales cess. Okay. If the sale fulfills certain conditions, if you sell the property gifted to you, well, forget all these things. Only remember this 20%. Okay. Long term capital gains are charged at 20% plus 3% cess. 3% on this 20%. So it becomes 0.6. Okay. Yeah. So two things important about this LTCG for property is 36 months. Before 36 months it is short term. After 36 months it is long term. Right. Long term capital gains taxed at 20%. Okay. Now what is the short term capital gains then? If I sell it before 36 months, then what will be the charge of tax for that? That also we'll see. Okay. How to save short term capital gains for selling? Okay. So yeah. How to save this capital gains? See this. If it's under property, remember everyone, if it's under property, only then you can save it. If it's under shares or equity mutual funds, you have to pay it. You have to pay it. Okay. Shares and mutual funds. Okay. Equity, only equity mutual funds. For property, if I gain something, then I can have various ways of saving it. Capital gains used to purchase or construct another house. I can purchase another house and then also I can save it. Okay. Means if I am having some capital gains of 5 lakhs and I purchase another house for let's say 25 lakhs. So this 5 lakhs I can use it over there. So I won't be charged in that case. Okay. This capital 20% I don't have to pay it. The new now important conditions about this new house. See this. The new house is to be purchased 1 year before or 2 years after the sale of the old house. 1 year before or 2 years after. Okay. The new house will be constructed. Now if it's under construction, it has to be completed within 3 years from the sale of the old house. If it's under construction, it has to be completed within 3 years from the sale of the old house. Got it? Clear? Concept clear? Housing? Here, this is very important point. If you miss out on this, you'll get it tough in exam. Okay. So long term capital gains clear 20% above 3 years. Short term capital gains, that figure I'll give you, and this how to save it. I can save it by investing in new house before 1 year or after 2 years. Okay. Ready-made house. Construction house under construction 3 years. Okay. Yeah. one additional housing property is purchased or constructed. So this is eligible for if for two houses. One is the one which I am living in, and second one if which I am purchasing for investment. Only two houses. If I am purchasing it for third house or selling it third house, then this capital gains concept, saving, beaving, everything is not there. Okay, you have to pay the capital gains tax in that case. Okay, yeah. You don't sell the new house which is purchased before, okay, and then if I buy the new house using capital gains, I can't sell it, okay, before 3 years, that new house. Okay, got it everyone? Yeah. Now this amount can be invested in some CAIIB bonds also, REC bonds, PFC bonds, CAIIB. There are various capital gain bonds, so there also I can invest it. Got it? Clear? Yeah. Now save capital gains, that is done. How to save it, we know it. Capital gain losses. Yeah, one thing about capital gain losses also, these capital gain losses, they can be carried forward up to 8 years. Remember this, they can be carried forward up to 8 years. Everyone remember this number 8. Okay, so capital gains losses can be carried up to 8 years. Okay, now what is this short term capital gains? Long term I gave you 20%, but what about the short term? Okay, is there anything about the short term capital gains? Nothing is mentioned. So what do we do in that case? In that case, it's as per your tax slab. As per your tax slab, whatever it is. For property I am talking, okay, only property. Yeah, so for property it's as per the tax slab only. There is no slab given for short term capital gains for property. For shares it's already given 15%, right? Clear this concept everyone? Remember these figures only you have to remember. What all you have to do. So I'll just summarize this and end it. For property, 3 years is the time limit for short term and long term. Within 3 years, short term. What is the rate for short term? As per your tax slab. Long term, 20% plus 3% cess. Okay. If in exam the question comes, you take it 20.6 because 3% on that 20, right? So take this. Number one. Number two, how can I save it? By investing it in the new property. That property needs to be purchased within 2 years after the sale or 1 year before the sale. If it's under construction, then I can take it 3 years for the max. Okay. One thing more, how can I, if I don't want to purchase any property, then I can invest it in bonds. That is known as capital gains saving bonds. Okay, these are issued by many institutions, government institutions. Okay, REC issues it, then some other companies also are there, they issued it. Okay, so you can invest in those also. So that's it about capital gains, isn't it? So what I'll do is I'll stop over here. Before going, let me tell you something about the new batches which are coming up for this May 23. Okay, everyone pay attention, because what happens, you might here, I would suggest you clear it in this time only, but for your friends also, those who are appearing, okay, tell them, see this, go to Adda 24/7. Okay, click on JAIIB and CAIIB. See this, click on CAIIB 2023 now, 2023 over here. Okay, 2023, click on this 2023, you'll see the batches over here, all these batches. See this, okay, bilingual plus this English batches. Okay, you are getting the discounts also now. Click on this, put the code Y432. See here, I have shown about this English batch. Similarly, you have bilingual batch also. Bilingual is starting just now. Okay, so 9th December, this English is also starting. Okay, bilingual is also starting. You can go for that batch also. Now all the details are given. See this, 4 subjects, ABM, BFM, ABFM, BRBL. Okay, all these 4 subjects. You can go through the details. Okay, you'll get the recorded videos over there. Ebooks are available, live classes are available, and the fees is, look at this, 23,996. But this 23,996, don't pay this. What I would say is click on view offers. On view offers, okay, click this code Y432. Y432. Everyone pay attention to this also. This is also important. Okay, Y432. 80% off you are getting, 80%. Okay, so 23,996, it reduces to 4,799. Such a huge discount. Okay, so go for it immediately. And what is this new portion? See this new portion, I'll tell you, okay, whatever is coming up for you, because you must know whatever is coming up, right, in your life. So these are the 4 topics: ABM, BFM, ABFM, BRBL, legal. Okay. So these 2 new topics have been added: ABFM and BRBL. BRBL is mainly from this similar to JIB. I don't say JIB only, because what happens, there are certain other aspects. I have studied this. There are other aspects which have come in. Okay. So important laws and acts, legal aspects of banking operations, part A and part B is there. Regulation and compliance is there. Commercial laws is there, means mercantile laws we call it. Okay, that is there over here. In this ABFM, this is totally a MBA topic actually. Management process, advanced concepts of financial management, valuation, mergers, acquisitions, and emerging business solutions. So these are the new concepts which have come in. Okay, so everyone must follow this part and tell your friends. Okay, first day I would suggest you clear it here only, using this marathon and my earlier classes which you have taken. Clear it with this only. Okay, chalo, I'll stop it over here now. Okay, let's move on. So best of luck to everyone, and tomorrow 5 p.m. I'll be doing this paper analysis. Join that also. Okay, chalo, bye.